Hello guys and welcome back to the channel. So in this video we're going to talk about Cathie Woods' guilt trip and what she's saying. I'm going to summarize what she has said in her latest video and what I think this has to do with the markets and of course our favorite stock Palantir. So as always, if you like this content, please make sure you hit the subscribe button. And if you want to go even further and help a European out in the European energy crisis, then make sure you join our Patreon where you can support the channel from $5 a month. And you really help me out. I mean, this is, of course, a joke. I'll be fine even if you don't become a Patreon, but do check it out. So let's begin the video. So Cathie Woods came out with her latest video in the No series called Guilt Trip. And first, I thought that this was her own guilt trip. She's someone who believes in disruption. And this year she really disrupted everybody's portfolio. And I thought this was her guilt trip. But no, she was very critical of the Fed. And she has some interesting viewpoints. So she might seem like a crazy lady to you, and I wouldn't blame you for thinking that. She is someone who went from complete unknown to mega fame and everybody wants to invest like her to being one of the most hated people on the street. Very impressive feat. I don't know anybody else who has been able to do that and in such short amount of time as she did. But I do believe I really like to watch her monthly in the No series because she has very good macro viewpoints and she raises some very interesting thoughts. So I took some notes here for you guys. So one of her first points was that Papa Powell thinks that he's a reincarnation of Chairman Paul Volcker. And she was saying that this could not be further from the truth because Paul Volcker was taking a sledgehammer and cracking the inflationary situation in the 80s that has been building for years. 15 years. He has done it by raising the interest rate from 10% to 20%, meaning he doubled it. Whereas Papa Powell has had inflation only the last 15 months as opposed to 15 years. And this was also not built-in inflation into the system. It was, mainly due to, one-off things like COVID and supply chain disruptions and, the war in Russia and Ukraine, which is, by the way, a very good point. And she said that Papa Powell not only doubled the rates, but he went from 0.25 to 3.25 now, which is a 13x increase in the interest rate. And she is basically sure that the Fed is overcorrecting and a pivot is very likely. And this pivot we're going to see first in the rhetoric, and then we're going to see in the interest rates going down. So to be fair, she has been saying this since the Fed started raising interest rates by 0.25%. But, she can be wrong until she's right. In my opinion, she does have a good point. So Paul Volcker had the inflation build up in 15 years. It was completely embedded in the system. Everybody was counting and living with inflation. He only doubled the interest rates. And we have only had inflation for the past 15 months. We have 13x'd the inflation rate, and it's a complete bonkers shock to the system. Then she was saying that what happened in England, that the Bank of England had to step in and start buying bonds again, was actually also the direct result of the Fed handling the situation. Because even the Fed acknowledges that when they're raising interest rates, they have repercussions overseas and in other countries, but they obviously focus on the US because they're the central bank of the US and not the central bank of the planet. Then Cathie Wood is saying that the Fed is insisting that they're taking data-driven decisions, and she thinks that this is very far from the truth because they are looking at very laggy data and, very lagging indicators. And if we look at the pipeline of, indicators that are much closer to present time, then the pipeline is full of deflationary indicators. She is saying that used car prices are dropping because people were avoiding public transport during COVID times and they were happily buying cars, and these cars they don't normally need. So now that COVID is going away, these people, a lot of them become sellers, especially because they see that the used car prices went up so much. Then she named that the inventory of companies is sky high, and Walmart reported very bad inventories. Nike very recently reported, and she actually cited here that the inventory, Nike had 3% revenue growth year over year in Q3. However, their inventory went 44% up globally. And in the US, only in the US, it was 6 to 8% up. And obviously, the only way that they can get rid of these inventories is that, they have to do discounts. So she's saying that this holiday season is going to be crazy good and we're going to have bargain basement prices. That's according to her. Let's see if this comes true. Then something that was very, very interesting with Cathie is that she didn't think that the job report that came out, which crashed the market on Friday, was bad. And she actually gave a very good explanation, because she said that unemployment fell from 3.7 to 3.5%, not because, more people got jobs, but it's because the labor participation was shrinking. And this is obviously has nothing to do with the amount of job openings. And she actually said that in the job reports where they list how many job openings there is 1 million less job openings, which is a very, very significant number if you think about it. She's also saying that the fact that the Fed is watching the unemployment so closely is a mistake, because, in the 80s, the unemployment between the 80s, 90s, and 2000, unemployment was very low. Yet inflation was still going down. And why was the inflation going down? Is because productivity was going up, which was offsetting the inflationary pressures of very low unemployment. So she's thinking that the Fed is not thinking correctly on this point, and the labor market does not need to be crashed for the inflation to be tackled. And lastly, she mentions that raw material prices have been falling like crazy. And she gave a few examples, like oil is down 29%, silver is down. She even said this example that people say, yeah, but this is from sky high prices. And she said, no. Silver is down year over year, 9% now. And, just lately it's down 28%. She also mentioned that the freight costs are down 48%, which is also an indication that, the demand is really seriously weakening. And then she looked at something else. So basically she's thinking that we're very, very close to the bottom. And this is what I want to also show you in the last part of the video. So she's saying that if you tally up the 2008 and 9 crisis, the hit that the market had now, you will see that investors have lost twice the money. Now, I don't know if she means percentually. I don't know if her number is inflation adjusted. Probably, I think she's looking at the absolute amount of money that has been lost. But she's saying that because now the bonds are also falling as well as the stock market is falling, this makes a lot bigger hit to investors. And the Fed is way, way overcorrecting. And then she said what we started seeing is that innovation stocks and her ETF, this is also what I want to show you, they stopped falling since May. They are keeping a level, whereas the general market is falling. And this is what you see in a late stage bear market, that the innovation stocks, start coming out of the shit situation that they have been in. She is very sure that the Fed is going to change and pivot. And first they're going to pivot in rhetoric and stop raising interest rates, I guess. And then they are going to have to very rapidly decrease the interest rates because they completely overcorrected. And amen, let's hope that this is what happens and inflation comes down. I was really looking at the market and I wanted to see, because so many times we have heard that we need to go to pre-COVID levels, so we have to go to the pre-COVID peaks for the market to fully bottom. I wanted to see, how are favorite stocks doing and how far are we from this? And you will be shocked, because it really might be that she's right and we're very, very close to the bottom. And in my opinion, of course, this is not investment advice. And I mean, if you watch this channel, you know that I'm buying Palantir and Tesla from any money that I can get my hands on. This is not investment advice, but I do think that from a risk reward, there is very limited, downside on the market, and we start to have very, very nice upsides. So let me just show you a few things. For example, Palantir, they DPO'd in 2020 after the COVID, so they don't have a pre-COVID peak, but we can see that they are way lower than the DPO price now. And they have bottomed in May, and it doesn't seem to go lower. Now we have my other favorite stock, Tesla. Tesla is very, very far from, this is the COVID peak. However, on Tesla, because they have increased their production so much and they have grown so much, it's utterly impossible to go back to pre-COVID levels. So this is not a good example. Based on this, we have a lot to fall if we have to go back to pre-COVID. Now here comes the interesting thing. So we have the S&P 500, and currently the S&P 500 is at a support level, and it is within a 10% range of reaching this is the pre-COVID highs at this point. Now when we look at the Dow Jones has actually hit below the COVID high. So this is the COVID high, and we are currently below. So if it's true that we need to go to pre-COVID levels, then the Dow Jones has arrived. Now, if we look at the NASDAQ is also still higher, obviously, than the COVID. This is the pre-COVID peak, and we are here. But so many of the companies have basically pulled forward growth because of COVID times. So I don't know how realistic it is that we go back to previous COVID highs, but we are within a 10% range of that. Then we look at the Russell, and now the Russell is basically at 2018 levels, lower than it was in 2018, which is pretty crazy if you think about it. Then I want to show you some other things. So gold, which is the great anti-inflationary asset, and people consider it the safest asset, and it has been straight downtrending, down 20% since 2022. And I thought about it like, how is this possible? And it actually makes a lot of sense because when you're doing quantitative tightening, it's like the opposite of printing money. And if printing money makes the gold price go up, then obviously quantitative tightening has to make gold price come down. So not even gold was safe in this recession. Now we look at Bitcoin, and it's the same for Bitcoin. Bitcoin was created because people were very dissatisfied with the Fed printing money and inflation. And now when we're fighting inflation and doing quantitative tightening, this is sort of taking away the use of Bitcoin. I know the crypto bulls is going to kill me in the comments, but yeah, you have to see this point that it's actually very logical that while there is quantitative tightening, it's very hard for Bitcoin to start going up. This is the pre-COVID high of Bitcoin. We are very, very far, like 50% off from that point. However, you cannot see me because my head is so big. Bitcoin had a peak in 2018. So we are currently at 2018 levels in Bitcoin. So it would not be weird if Bitcoin would rally from this point up. So this might be a bottom. If we have to go below the COVID highs, we are still 50% off. And also something that is very, very interesting with Bitcoin, you can see we have started bottoming in May and we have not gone lower. The same for Ethereum. Ethereum is actually slightly even uptrending. You see, this is the bottom in May, and the pre-COVID levels is, oh my God, it's like it has to fall like 80% from where it is, but it's the same thing. It has gone lower than the peak in 2018. Now here is ARK Invest. This is even crazier than everything else. You see May is the bottom, and ARK Invest is cheaper now than it was in 2018 January, 2017 December. So this is just so crazy how low the market has gotten. And then I wanted to show you, crude oil is also downtrending now. Yes, I know some of you will point out that because of the latest OPEC Plus decision, this last part is going up. But if you look, the peak is definitely seems to be behind us. I mean, it can always go up and go higher, but it seems to be behind us. And this is natural gas also downtrending. Lumber has straight out crashed like, 70% since 2022. And there is a lot of growth stocks like Airbnb, which is definitely much higher than the June lows. Netflix, you know, much higher than the June lows. So there is some indications that Cathie Wood might be right, and we might be close to the market bottom. I even did a video about this yesterday. I personally don't think that Palantir is going to break this $8 range, but you know, as I learned in the last video, I cannot make any predictions with any certainty. But I do believe from the bottom of my heart that we're getting close to a bottom, and the Fed is going to have to pivot because these are such sharp increases and things are just crazy. And it's always the darkest before dawn. So let me know what you guys think. Do you think we're close to the bottom, or do you think that we're going to be going down in all of 2022 and in all of 2023? So, and if you have been watching, I know you're an OG viewer. Thank you so much. I really appreciate you. Please make sure you hit the subscribe button and check if you're subscribed, and make sure that you're subscribed. So thank you again, and I'll see you in the next video. Ciao, ciao.